So if you're buying put options to expect that the market's going to go down, it's kind of like you're buying insurance, right? So if I'm a trader, let's say I'm on Wall Street and I'm trading the S&P 500, right? And I think things might go bad, right? Everything might go to hell, right? Then what I would do is I would buy put options on the S&P 500 so that if the stock market goes down, I make money. So it's almost like a form of insurance, okay? And that's what the VIX index measures here, is how much are people willing to pay for that insurance. That's this measure implied volatility, and that shows up in the VIX calculations here. It's a little bit more complicated than that, but that's kind of the basics of it. So whenever people think that the stock market is going to fall, you see big spikes. So here, for example, 2008, really big spike, right? October 24th, 2008, the VIX index was at 79. It was huge, right? Right now it's at 17. We're quite calm right now. Another big spike, 2020. This is COVID, right? March 20th, 2020. Huge spike, shot up to 66, right? And then more recently, we had a spike here as well in 2025, April 2025. What was going on? That was the whole tariff thing, right? So you could see here very clearly every single time that people start to panic about the market. 2008, we see another one here, a smaller one. This one was around 2010. There was a bit of a drop there as well. If you guys were trading through that, 2011, there's another big drop in the markets. People are kind of nervous. And then it wasn't until COVID that things kind of got really crazy and stayed pretty high for a while. And not until it wasn't until December of 2023 that things calmed down. So it's a very good gauge of like how crazy people think the market's reacting to things right now, right? Okay. So we're using the VIX and we're saying, okay, as long as it's below 21, then we're going to trade. If it's above 21, stay out, right? So basically, if it's 2008 again, just don't trade, just stay away from it, right? Which I think is a very good thing to be doing. Again, not financial advice, but I wouldn't want to trade options when it's like 21, especially not call options, especially not betting on the way up. If the VIX is at anything above 21, I'm out. I'm going to go to the beach for a bit. Go relax for a little while. Okay, cool. So it does that, and then also manages positions with 100% take profit and a 50% stop loss and a 1 week time to exit. This is the important thing here, is we had this strategy running where we're saying it's a 1 week time to exit. So there's something wrong with that 1 week exit, and we'll see what the AI said here. We're going to see what changed. Okay. I'm going to move this aside. I'm interested in the analysis. Okay, it says, what changed in its revision? So it says, fix the live exit bug by adding a hard days to expiration check that forces a sell to close when an option has 7 days or fewer to expiry, which is very good. I think that's kind of like a fail safe. That's a good thing, because before we were saying if you hold it for a week or longer, then sell it. But now we're saying, okay, just in case something goes bad, if it's 7 days to expiration, let's also sell it, right? So it's kind of like a fail safe. Okay, and then also said rework exit flow to compute held days and DTE even when entry price is missing. Interesting. And added a fallback to use position.average fill price for P&L checks. Okay, good. So introduce a new parameter, expiry close days, default 7, right? Maintain single leg market exits, okay, and added clear diagnostics around exit conditions. Okay, so that's looking pretty good to me. That sounds like it fixed the bug that we were seeing. Let's take this. I'm going to run a quick back test just to do like a smoke test. I'm going to do a much shorter time period. Let's say I'm going to back test this from September 18th to October, right? Actually, let's go back a little further. Let's go back to like August. So this is not to see the performance. This is just to see if it's like actually working or not, right? So I'm running this, and I want to do a quick little check here as well, just like I did last time. Again, this is a feature we plan to give to you guys very shortly, but right now I'm doing the more technical version of it, where I get to see exactly what this thing did and how it analyzed everything. So received stats on logs analysis. This is what I want to see. So I'm going to go in here. This is a little bit technical. But like I said, we're going to have this available to you guys in the future. Okay, copy contents, and then I'm going to put it here. And this is what it said. It said the bot failed to sell options due to two distinct issues: missing expiry-based exit. Primary problem is that the strategy lacks any code to explicitly sell options when their expiration date is a week or less away. Okay, so we talked about that. Then potential entry price issue for time-based exit. The hold for a week rule relies on entry price being set by the on-filled order callback. If entry price remains none for a position due to incomplete fill or callback error, the time-based exit will not trigger. This is a likely reason the HIMS option bought on October 2nd was not sold on October 9th, 7 days later. The provided logs do not contain details of the HIMS trade or its exit attempt, as they are from October 2, showing any new buy attempts. Right, the provided logs from October 2nd, a Thursday, when the bot is attempting to buy new positions, they reveal. So it actually did look. So this is pretty cool. We have an AI that basically looked through our logs, right? So it was running the strategy. We're running it for some time. It had a bunch of logs that I produced. You know, back in the day, right? We've been teaching people how to do this for quite a while. Back in the day, what you would have to do is you'd have to actually look through the logs and see what the heck is this thing doing? Why did I do this? But instead, we got this AI that analyzed it all for us, which is pretty damn cool. It does take a few minutes to do it, but it does a very good job. So here is saying VIX check passed, right? And it's saying the symbol ranking and buy attempts. The bot successfully ranked symbols and attempted to buy. And then illiquid options, WDC, one contract was skipped because its bid-ask spread was too wide. That's actually pretty interesting, right? And then invalid option symbols app. Another candidate failed multiple times due to invalid symbol errors from the data source when trying to retrieve option quotes, leading to skipping the trade. This indicates potential data quality or symbol mapping issues. Interesting. So I actually got into all this stuff. Here are the actual logs. Here's the root cause analysis. That the AI did a fantastic job here. I think it's really cool. I'm actually surprised it's doing this spread analysis too, because that's not something that we asked it to do either. It just kind of did that. Let's see what the analysis of the other set of logs is. Let's see. So analyze those logs, analyze these as well. So this was the primary bug is that the strategy is missing a crucial exit condition. Okay. Regarding the second issue, selling after holding for a week, the code does contain logic to exit after hold weeks set to 1 week or 7 days, but it's not firing for a HIMS position. Without live execution logs detailing held days or current mid price at time, the exit should have occurred. It's difficult to pinpoint. Okay, so this one is actually reading through our live logs, and this is the one. This is the key insight from the AI. So that's actually really cool. Sorry, guys, we got a little bit technical there, but I'm thinking about this in preparation for our new feature that we want to be launching. So I wanted to really dig into that. Okay, we have the back test running. So far, this is looking good. This is only over a very short time period, but it is looking quite nice so far. And by the way, guys, I don't know if you've noticed, we added a new feature to BotSpot over last night. We actually added this last night. We now have official support for a brand new data provider called Theta Data, which I'm very, very excited about. So if you guys go to BotSpot, you can check this out. It's so much easier to do stuff now. Back before yesterday, you would have had to go off and get your own data source with Polygon and get your own API keys. It was kind of a pain to do that.